Hey guys, in this video I'm going to go over how to calculate the position size of multiple stocks when spread trading and how to easily control the amount of leverage you decide to utilize. To do this, we are going to be looking at the position size calculator tool. That's found within the premium content section of the website under the position size tab. Just click this link to download the Excel file and go ahead and open that up. Now, once we have the short list of stocks that you want to trade, you can use this tool alongside the volatility analysis tool to support your trade entry. First step is to populate the data tab. So simply fill in the ticker of the stock, name, last price and beta. Do that for all of your ideas. And then the beta weight will automatically be calculated here. And when looking at the stop loss and target price, you're simply going to be using the volatility analysis tool that we've previously discussed in other videos. You'll see here as well that the risk reward ratio for this trade is calculated for you based on the stop loss and target price. Now, in an ideal world, a 3-to-1 risk reward ratio is what you're after. Well, you'll soon learn that looking at the historical behavior of stocks, that it's not always probable, okay? One important point to note here actually is that when looking at our stop losses, okay, we are wanting to cut our losses straight away and let our winners run, alright? And I mean, that is such an important concept when trading. So if your take profit is hit, okay, you can simply roll up your stop loss, and if you're feeling really confident about the trade, then you can add to the position size. Simply make sure that your average entry price is below your new stop loss, and you've essentially got a free trade on the table. So once all that data is populated, we'll then jump over to the position size tab, okay, and you'll get a nice overview here of your soon-to-be portfolio. First step is to populate your trade account balance in cell G5. So in this example, we've got a portfolio balance of 10,000. We then move on to selecting our account type. Bit of flexibility here, okay, you can choose to trade either shares, in which case you would change your desired leverage to no leverage. You can also trade CFDs, or for use based in the UK, you've got the option of spread betting, in which case you can take advantage of the different levels of leverage that we've made available in the template. Just focusing on CFDs for now though. Once you've specified your account type, you want to specify the number of ideas you're interested in trading. So as you can see in this example, we've got 5 ideas. Okay, a spread trade being made up of 1 long position and 1 short position. So let's say we wanted to decrease the number of ideas we want to trade. Let's say we wanted to trade just 4 of these ideas. What it does is adjust the weight, okay, when looking at position size. So every idea now has a 25% weight because we're just looking at 4. And you can see if we increase the number of ideas to 10, then each idea just has a 10% weight. So we'll pop that back to 5. The final step is to determine your desired leverage. So when trading, you really need to understand what leverage is first of all. So if you don't read up on this topic, I usually trade stocks with 3 times leverage, and I will go up to 5 times leverage once I've seen an increase in the portfolio balance throughout the year. The reason I do this is pretty simple, right? I never want to receive a margin call. So in this scenario, we've got 10,000 in our trading account, and we're using 3 times leverage, which gives us a portfolio value of 30,000. If we're trading that across these 5 ideas, I mean, each of these ideas will probably have on average about a 10% stop loss, I'd say. Let's just check. Yep, so the average stop loss is just over 10%. So if every one of these ideas got stopped out at 10%, right? I mean, if every single stock hit the stop loss, there'd be a 10% loss on the portfolio value of 30,000. So that'd be a 3,000 loss. And taking the 3,000 away from this 10,000 would be a 30% hit, okay? So the portfolio balance would now be just 7,000. If that happened, then, that's a huge warning. I'd stop trading for about a month or 2 and I'd reevaluate the whole situation, because if you're getting all your trading ideas wrong, then you're doing something seriously wrong, yep. And once I come back to the table, I've still got chips there, right? 7,000 to begin trading with again. You can't do that if you start playing around with, anything past 6 times, 7 times leverage. So just remember that, and keep it at sensible levels, alright? Nothing more than 6%. Now, once you've decided upon all the aforementioned, you've populated the account balance, chosen your account type, chosen a number of ideas you wish to trade, as well as choosing your leverage, you're presented with the relevant position size of your positions, as well as the stop loss and target price, okay? One final thing I will say on this is that remember your spread trading, okay? So both orders, your long position and your short position, need to be closed out at the same time, okay? For your stop loss and your target prices, you should probably create a price alert at these points, because if your broker doesn't allow for automatically closing out a spread trade, you never ever want to be closing out just one position and letting the other position ride, because all this is going to do is increase your risk exposure, and it's just undisciplined trading. So set a price alert, close out both orders at the same time, and likewise when you're looking to approach your target prices, roll up your stop losses accordingly together. And that's it. That's all there is to using a position size calculator. I'm sure you'll find this tool useful, and like always, if you have any questions, simply leave your comments in the TradingFM forum.